Hello, my friend. How are you? I'm so happy to see you again. I want to talk about Friday, last Friday of the last week, which is very important for trading. It is usually happen to me making a loss of that day because I make a mistake. But my mistake is um, how can I say that it is I'm right, but it is not the right time to make that. How that happened? I want to show you that the price on Friday, this is the high of the Thursday, and this is the opening price of the Friday. This is the opening price of the Friday, and this is the low of the Thursday. This is the high of the Thursday. This is the low of the Thursday. This low of the Thursday is sweeping this double bottom. This double bottom. You can see it sweeping this double bottom and then pushing the price upward and then retrace to this area and then pushing again during Asian and during London session, during Asian and during London session, pushing up and sweeping the high of the Thursday. This is Friday, and then the price retraced. Why the price retraced? When the price retraced, I see the first thing that I saw it that the price when it is retraced doesn't mean that the price will push down. Why? Because if you can see on H1 there is no fair value gap between candles. You can see how the price pushed upward here. This is a fair value gap, this is a fair value gap, and also this is a fair value gap, and this is also a fair value gap even if it is small. And but this area is not potent because it is retraced to area I will remark it to you now. But it is a pullback. It is not a trend down. This is the first thing. The second thing, when I what make me buying is this point that I told it to you. There is no fair value gap between these candles by H1 and even by 30 minutes. You can see it by 30 minutes. This is a leg of pullback. Okay, but where they are directed, what is the target? The target is this fair value gap on H4. You can saw it. This is a fair value gap on H4. You can saw how the price target this fair value gap. It is very important to see H4, okay, fair value gap. So the price targeting this area and then pushing upward. That's the point that I want to talk about. But I'm make buying here and make stop loss here. So my stop loss was hit before the end of the day of the Friday. That's okay, no problem. Just we are teaching about it. What are we see then? The most important thing that I saw it is the sorry is the what we are seeing is the you can saw on H4 there was um, a very big movement. This is down a very big leg that is moved with fair value gap on 5 minutes, and then the price moving sideways and down sideways. This is a drawdown. I saw something which is very important, that this rejection, you can saw it, this rejection, if it is if this rejection is associated with pushing the price down and make a change in the state of delivery or make market structural shift. This is a market structural shift. You can see on lower down, this is MSS, if you can saw it, MSS, okay, market structural shift, okay. And this is called order block because the price moving up and then moving down and push the price to test the low. This is an order block. So I should go to lower time frame, 5 minutes like this, and 3 minutes to see what will happen. I should sell in these area. You can see how the rejection, you can see how the rejection is in lower time of frame. I should sell, but I am buying. You should know the price, how it move. The price again test this order block, this also order block on lower time frame, okay, and test these areas. This is double top, and this double top, and then pushing down again. When it push down again, it make fair value gap up and fair value gap in, fair value gap in the order block, then fair value gap out. This is the sharp turn. This is inverted fair value gap. You can saw it. This is inverted fair value gap. Okay, you can sell in here. You can sell here, but I didn't make that. That's my fault. Okay, I should sell here and take a profit here. Okay, 3355 to 3351. Okay, you can see how the price move. Even it is a pullback, you can make a profit. If I change it to 1 minute time frame, if I change it to 1 minute time frame, you can see this order block when I saw it on 15 minutes. When I saw it on 15 minutes, this order block, as I told, as I said, 15 minutes. Sorry, order block. Okay, you can see how the rejection happened here in 15 minutes and the price targeting lower. You can see how the rejection happened here. This is the double top, sweeping this area also from this order block that push the price lower and make change in market structure shift. We can change to 1 minute and see how the price move. How the price move. You can see that the price on 1 minute, after touching this area, after touching this area, okay, and take liquidity from these high, you can see how the price pushing up and then pushing down and make market structure shift again. This, okay, that to prove our theory. This, okay, and then retest inverted fair value gap with fair value gap on 3 minutes. You can see it also on 3 minutes. Okay, and this rejected from this order block and then pushing the price lower to the target, which is the 3351. You can sell here and pushing here, and also you can see here the price moving down, then retest again, then pushing down, retest again. You can see that there is another possibility, or there is another trading again this area. You can see this is what is called the inverted value gap, because the price pushing down and make market structure shift. Okay, market sweeping this low and change the this is market structure shift. You can sell in this area after sweeping this and then targeting this area. Sell from 3352 to 3350 or lower if you want to wait more. Okay, if I change it to 3 minutes, how can I see it? You can see it as a rejection, as a rejection. 5 minutes, you can see it as a rejection, very big rejection. 15 minutes, you can see it how the rejection happened here in this area, and the price retest again and pushing down. And my stop loss is 335, and I'm going out of the market when I see that. I leave it in the market because um, I saw it is a pullback, and the next week the price will move up. Well, that's right. You can see here. You can see here how the price moved from this area to upward. This area, if, as I said in the previously, there was a fair value gap on H4. This is a fair value gap on H4. This is first thing. Okay, this is fair value gap on H4. H4 FVG. Okay, but this H4 FVG is associated with inverted fair value gap, also H4. This is inverted fair value gap also. And this you can saw it how the price touches. This is how the price touch it. And also there is a breaker block. This is a breaker block. This is today, which we are on Monday, 21 of July. This is a breaker block also. You can saw it. This is a breaker block associated with fair value gap. The price touches on Asian session. The price retraced. We can see the price retraced with this area. Inverted fair value gap with fair value gap and also breaker block. And also this is an order block. This is fair value gap. All these signs that the price should move upward. And also we are see the rejection, the first candle rejection, and there is no fair value gap here that give me a hint that there is a big momentum. There is no big momentum to go down more. Okay, so all features are present. This is the first fair value gap H4, inverted fair value gap with fair value gap, a breaker block, order block, and the price moving upward. And this is a change in the state of delivery. You can saw it. This is a change in the state of delivery. Okay, here there is a signs of rejection. The first signs that respond to this fair value is a rejection. On H1, there is a signs of rejection. Signs of rejection. Okay. This order block push the price lower, sweeping this. Okay, this is sell side liquidity. Okay, SS sell side liquidity. Okay, sorry. This is the sell side liquidity on 30 minutes. You can see how the price pushing upward, and this is a change in the state of delivery. This is a change in the state of delivery. Or we are changing into 15 minutes. You can see how the price move. This is rejection on 15 minutes, and the price retest this area, then retest again, and moving upward. When it is moving upward, you can see how the price rejected. So this is a change in the state of delivery. This is an order block. This is a change in the state of delivery. This is a change in the state of delivery. This is the breaker block. This is a breaker block. Okay, this is a breaker block. This the blue one is a breaker block because it pushes the price lower, sweeping the low, sweeping also the H4 BDRI, H4 BDRI inverted, and also sweeping this breaker block as I said, and then the price pushing upward and making change in the state of delivery, pushing upward, then return to retest this breaker block, and also this is called order block. This is fair value gap upward. So and sweeping this low. So we should return to this area and make a buy here. We will change to lower time frame this area. I will mark it by this circle. You can see how the price reacted, pushing upward, then retraced, pull back to this area, and also we can see that this order block, this is a breaker block. You can see it. Sorry, I will change something here. Sorry, just 1 minute, 1 second. Okay, this is a breaker block. You can see here. This is a breaker block on 3 minutes. Uh, how the price moving down and then retest this area. Okay, this is a breaker block, and then on 1 minute we can see how the price reacted. How the price reacted here. The price moving down, then moving upward, making markets. This is this area. This is very important. You can see. You can see this. There is a market structure shift on 1 minute. Market structure shift, and the price return to retest this area, and this is the what is called the sorry. This is what is called sorry, sweep. This is sweep. This is the sell side liquidity. Okay, and this is market structure shift. MSS on sorry, on bottom top. Okay, with FVG return the price to retest this area, then pushing upward. You can make a buy stop in this area after pushing above this area. Can make a buy stop here, and you can make a buy stop here and take the profit how the price reacted and moving upward. Very beautiful. When the price moving upward, you can see how it reacted to this area. You can see how the price moving upward. In this area, we can see also any signs. We will change it to H2. The price when it pushed upward, the price pushing from this area, we are taking the the price here and then pushing upward and reaching this area. When it reaching this area, the price make H4 FVG. This is H4 FVG, and this is H2 FVG. How we are responding to this area? When the price pushing upward and making market structure shift, this is market structure shift, okay, and then return to retest this area. The price make a rejection to candle rejection here on H2. When we change it, sorry, I will remove this. I will remove this also in 30 minutes. There was a rejection in this area, okay. On 15 minutes, we can see the signs of the rejections and how the price reacted. You can see there was the price pushing down, then pushing upward, then pushing down below this, sweeping this low. You can see it sweeping this low, okay. This is sell side liquidity. This is sell side liquidity, okay, on the top, not on the bottom. Make it, and then pushing upward. When the price pushing upward, make a market structure shift. This is a market structure shift, okay. MSS bottom top, okay. Then it retraced the market to retest again on 5 minutes. You can see here on 5 minutes how the price sweeping this and then pushing upward and market structure shift, and also this market structure shift another one on 3 minutes. On 3 minutes, you can see how the price reacted to this area on the lower time frame on H1, on 1 minute, sorry. The price begin to make an order flow to push the price upward. You can take the price here, sorry. You can see how the price reacted to this area after pushing upward. You can see how the price, this inverted fair value gap, this is inverted fair value gap, okay, how they reacted the price to it, and then you can take the price here to go upward, okay. That's very beautiful. And there was also a very different opportunities here to enter in the market. And the first target you should learn it is the high of the week. That I think that is enough to make it. This is the high of the week, sorry, this is the high of the week. This is the high of the last week. You can take it and go out of the market. You can enter here and go here, take the profit here. You can enter here in this area 3366 to 3376. Thank you very much, my friend. I'm so happy to see you again, and I happy to make all of these. Thank you. Bye bye.